Welcome to another episode of
Rain Nev.
And today we have some special guests.
Yeah.
But let's introduce our guests and then we'll go right into the segments. What do you think?
Yeah.
So I'll let you guys introduce yourself. We'll start with the gentleman on my right. So go ahead and introduce yourself.
So yeah, my name is Ivan Reyes. I'm with the home team of Round Point Mortgage.
My name is Audrey Gonzalez. I'm also with the home team of Round Point Mortgage here in Orlando.
Awesome. And they're here today and they don't even know this, but they're here today because we call this the drill seat. This is where we're gonna drill you about mortgages today.
Great.
All right, are you guys ready for that?
More than
Sure.
ready.
All right, but before we do that, we obviously know that today is a special day in our hearts. It's been 20 years since the anniversary of 9/11, and we have faced a lot of adversity coming through, and there's a lot of people that we need to remember. So we're going to take a moment, and we're going to go ahead and remember our fallen Americans, our fallen brothers and sisters. And so we're going to take about a 10-second moment of silence to remember them. So. All right. They're definitely never forgotten, right?
Never.
Awesome. So we'll go ahead and get started. And the first thing we're going to go ahead and do is we're going to talk about, we're going to go into the segment of what is a mortgage?
Easy questions.
We're going to start easy. Let's ease them in. You know what I mean?
Sure. So a mortgage is pretty much a loan that you get in order to secure a property. So if you're gonna buy a condo, a house, a 2-unit, 3 units, you speak with a lender, and they'll go ahead and let you borrow that money. In exchange of that, they'll put a lien on the property until you pay for it, and that loan lien to that bank. That's what we call a mortgage. So that's the technical answer.
You know what? I like it. They explained it in like 5 seconds.
Yeah, no, that was perfect.
I understood it.
So if I wanted to get a mortgage, what are the steps that I need to take?
So the first steps would be to speak to a lender. A lender will let you know the required items in order for them to start processing a file for you. So, for example, the most common items would be your bank statements, ID and social to pull your credit, address for the last 2 years, bank statements to make sure that you do have the assets to purchase the home, and your W-2s, pay stubs. That pretty much summarizes the basic qualification documentation.
Let's talk about that because I know that a lot of customers out there are really confused when you say W-2. When you say W-2 and tax returns, what do you guys mean by that? Because a lot of people don't understand that.
So W-2s are actually the forms that your employer gives you at the end of the year. So you take those W-2s and you take them to your accountant. Then your accountant prepares the tax returns.
Gotcha.
So that initial document that you get from your employer, those are your W-2s.
So and you need both of those documents, correct?
You would need the last 2 years. Yes, you would need both
Of both.
Correct.
Yeah.
Tax returns and W-2s.
Because sometimes you have a customer come out and he's like, "Hey, I gave you my W-2s. No, you gave me the form. I need to see what your tax returns look like because they're not the same always, correct?"
Correct. And the tax returns are very important because a lot of times you have self-employed borrowers and they don't have W-2, so those documents are definitely necessary.
Awesome.
Yeah. And
What do you have?
My question is a little bit tougher, so I was thinking about holding on to the end.
bring
All
it.
right. No, bring it. Let's start them.
We got
So-
Because the tougher you get, the tougher I'm gonna get. So go ahead.
Right.
Here's a competition, by the way.
Right.
We do the show together because we have no chemistry. That's the reason why we do the show, because we fight about everything when it comes to the show. You should have seen our unemployment show. That was crazy. But go ahead.
That needs to actually be another episode. But anyhow,
Yeah, exactly. Where I was right. Exactly.
So my question is actually something that we've been seeing a lot, and I guess it's been mentioned more or less. I haven't really seen it myself, but 40-year loans for
40.
Yeah. Is that something that's going to be coming out pretty soon, or how's that going to work?
Honestly, I don't know. I don't believe so because, I'm not gonna say that it's not gonna happen, but right now, per government laws, so let's start with this. We work with what we call qualified mortgages.
Mhm.
So any residential lender, you're gonna be able to get a regular mortgage, and we sell them to either Fannie Mae, Freddie Mac, HUD, VA, FHA. Those loans, they are backed by the by the government. They're sold back to Freddie Mac, Fannie Mae, etc. And they have a set of rules
Mhm.
in order for us to be able to sell them those mortgages. And those rules are created by Congress. So a few years ago, a long time ago, they decided that anything over 30 years, it's actually a disservice to the clients.
Okay.
So for that to happen, we would need new laws from Congress. So I'm not gonna say it's not gonna happen, but it could. Now,
Okay.
going into qualified mortgages, of course, there are lenders that don't go by those guidelines. That's what we call the private lenders, and all those sort of banks. Those are the ones that can do
Like alternative
You're
lending.
not QM,
Exactly.
you're not
Yeah.
QM
so
lender.
anything
Correct,
that's not
correct.
QM, they can do whatever they want. We regular lenders, we have to follow those guidelines, and at least
So,
in
as,
the foreseeable
so in the
future, we'll
foreseeable
see.
future, we're not going to see it, but the Congress is talking about it right now.
So if they pass the law, then yes, it's gonna happen.
Because Fannie Mae and Freddie were the ones that had initially discussed that. So I don't know. We'll see how it happens. What else is needed that's very important to the buying process? So you have the lender. What are the individuals also needed in order for someone to buy a home?
So it depends, every borrower is gonna be different depending on their situation, what we get on the credit report. Like there's gonna be a lot of information that's gonna be on the credit report that perhaps we may not know when we require the initial document. So at that point, we start asking the client, hey, can you tell me a little bit about this? Can you tell me a little bit about that? We didn't discuss it with the original application. So it's all gonna depend on the client, on the borrower, and their situation. So
Got it.
the situation is gonna be different for everybody. Then you're gonna have your regular borrower, which is the laying W-2, no issues, their credit is excellent, but that's not always the case, as we all know.
Yeah. So in regards to that, what other alternatives QM type loans do they have in the event that the borrower is, let's say, I'm just going to give you a scenario, right? So let's say the borrower is a no credit, amazing income, but they just don't love credit. Do they have alternative ways to get a loan?
We do have a program. It has been on hold a little bit due to the COVID-19. A lot of those special programs were put on hold just to make sure,
Kind of like put a pause on it.
Yeah, just put a pause on it for now. But those will be coming back eventually. But we do have the programs available. Unfortunately, they're on hold, but they will be coming back.
So in regards to those programs, can you? I mean, I know they're not available now, but when they come available, what kind of details can you give us about those programs?
Usually with the programs that we have right now, it requires a little bit more of a down payment.
Okay.
The credit scores can be lower, but if we're able to justify it, I went through the situation. This is the reason why my credit is no good. Or this is a reason why I have started rebuilding my credit. So we do, those programs do require a little bit more of a down payment and a little justification.
The reason I asked, so I'll give you an example. So I was reading an article the other day about Ryan is buying. I don't know if you guys know who Ryan is, but Ryan is a little kid that just made $29 million. Makes you sick to your stomach, but I'm super happy for the kid.
It makes me happy.
It makes me happy that a 9-year-old can make $29 million. Well, he's buying a house. His dad's buying a house, right?
Yeah.
For him, and he wants to put it in this kid's name. And they want to take a loan on the house because it's going to be something like a $8 million home or something like that. So because of that, they don't want to take all their assets and put it into it. So they want to, maybe put down $4 million. But you're not supposed to discriminate on age, right?
No.
Right.
But Ryan has zero credit,
What is he, like 8 right now?
Yeah, no, he's 9.5.
Yeah.
How does he get a loan?
So a 9.5-year-old,
Yeah,
you have to be 18 years old in order for a loan to be under your name.
because he has to be competent, correct?
Correct.
Okay.
And a child cannot make those decisions.
No, absolutely not.
9.5-year-old.
Yeah, because the dad's trying to get it under his name, but I heard you can add a child to the loan.
Yes. Well, you can
No,
add it
to the loan,
title.
to the title.
You can
Correct.
add them to
To the
the
title.
title, not to the
So,
loan.
exactly. And somebody like that, like our guidelines will say, if we have some type of trade lines like utility bills, or let's say you've been paying Netflix for 12 months, if we can show 12 months of good payment history and at least 10% down payment, usually somebody without credit is able to get a
As
loan.
long as he's 18 and he's paying those things, because Ryan ain't paying none of that.
No.
Yeah.
I mean,
Yeah.
he's
Exactly.
paying all
Technically,
of
he's paying all of it.
it. All
but,
of it,
yeah.
but
But it's amazing that a YouTuber can make that kind of money.
Yeah.
And it's so hard. Like I was looking at the lending, the lending requirements, and obviously there's some changes are going to have to come down the pipe because you do have 18-year-olds
Oh.
now that can afford it. That are
Yeah.
running these amazing channels that are making 2, 3, 400. They're not making Ryan money, but they're still making $2 to $3 to $400,000 a year,
Yeah.
and they're doing their taxes right. They're doing everything right, but they don't need credit because they do everything cash. They're not used to getting credit because they're 18 years old with a lot of money.
I had one that was she turned 19 in the process. Like we had her under contract, she turned 19, and because she had no work history because she's coming out of high school.
Yeah.
So,
but a lot of times the work history can be justified with the transcript from high school.
Exactly. That's how we were able to get around it.
Yeah.
And she had, I want to say, like 12 years of good credit because her mom put her on her credit card. And I was like, your credit is better than most people. Like,
that was it was pretty. It was hard on some ends, but easy on the other, which is really cool. So
I actually started doing that with my daughter.
That's awesome. That's awesome. How does she
actually cover that? Actually, like what that means, like putting your child on.
You can add them on your credit card.
I mean, for the public. So
let the public know exactly why you would do that. What's a benefit to your child, as long as obviously you're making the payments. You know.
Correct. I'm the one responsible, but I decided to add her to my credit cards because I figure by the time she's ready to purchase a house, she'll already have established credit. And having like a bill under your child's name once they reach 17, perhaps, then by the time she's 18, she'll be ready because she'll have her own credit plus my credit to justify.
And obviously you're educating her on the importance of making sure, because I didn't get that education, just so you know, when I was 18.
Well, I didn't get it either. That's why I think it's important to let
absolutely
educate them as much as
and it's sad because we don't teach this in the school system, so it has to be taught at home. Definitely 100%.
It doesn't even have to be a big credit card because her credit card her limit was $500.
Yeah.
And her mom lived in Massachusetts, and she's like, this credit card only gets pulled out when I go visit her, because she holds on to it.
Yeah, it's the history on it.
Yeah,
you maintain a good history. You use it every once in a while. You pay it.
Exactly.
You stay within the 30%, limit. It's just a lot of factors.
I'll give you a story in regards to me. So when I turned 18, my mom gave me a credit card, right? So I thought I was Oprah Winfrey. I ended up going to the mall with a bunch of my family and friends. And I think I told this story to Noah before. And I'm like, you get shoes, everybody gets shoes. I literally went over the limit the first day within a couple hours. And I never knew credit. So I'm like, I could just pay the monthly payment. And I'm paying the monthly payment and the balance is never going down. And I'm white the hell. So to make the long story short, guys, it took me, I want to say, about 4 years to pay out $500. So just imagine what that cost was at $43.
Yeah.
I don't even want to discuss it because it makes me sick to my stomach. But obviously, that's super important that we do teach the kids nowadays.
Your child's responsible with credit.
Yes, absolutely.
Don't give them a credit card.
Yeah, if we learn anything from this, is definitely make sure they're responsible. Like
monitor those statements.
Yeah. Monitor
nowadays they get a notification. You get a notification.
Yeah, you get a notification. You get an alert.
Do you spend this money at?
Yeah, exactly. A Psycho Bunny, it's like, my wife does that to me still. She's like, what?
All the alerts go to her phone.
Yeah.
For me, it's always Amazon. Amazon just charge you this.
Yeah.
Here we go again.
Oh, that's fun, right?
Yeah,
Seeing those charges. Yeah. I'm like, what did you buy this time?
I know.
It's
always a box.
I go to the house, it's something different. I go home, I got to bring in the box, So.
I tried to begin with that.
Yeah. Okay.
Right.
That's what they all say.
That's funny. Recently I went to stay with my uncle, and my uncle, he leaves at 5 a.m. every morning. That's just his routine. He leaves 5 a.m. And one day he came home early, and my aunt was like, go run outside and grab the box from the guy. I was like, what are you talking about? She's like, go grab the box from the UPS guy. I'm like, oh shoot. So I run and grab the box, and she's like, we'll bring it to the neighbor's house.
No way.
She's like, I have boxes come. She didn't explain it in the moment, but afterwards,
but you understood.
Every day.
Yeah.
I don't want him to know. So, but the neighbor understands. Like,
the neighbor knows what's up.
They already know.
They need to go to the neighbor's house.
Yeah, that's crazy.
I was like, he doesn't ask this new stuff every day. He's like,
you don't know.
So I have another question for you guys. Just came up. All right. So I'm looking to buy a house, right? It's a $400,000 house. What kind of income should I have? Let's say, and I know it's a trick question because obviously income versus expenses is very important. So on average, let's say my expenses are, obviously you're going to take off the expenses that are not coming with me when I buy the house.
Right.
Let's say on average, my expenses are $1,500 a month.
So
I'm testing their math here.
Well, I had a similar scenario to that. So I had somebody that.
So he's cheating, is what he's saying. Go.
No, well, yeah, I'm cheating. So I would say at least 80,000.
Okay.
Just because I had somebody that had the same issue, or not the same issue, the same scenario. So, and actually after that, there were a little bit more debt that came up, and he actually needed to have about 120
Okay.
at the end of the transaction, because the house was a little bit higher. HOA, it was a resort style community, so you
Gotcha.
know those HOAs.
Those HOAs are
have their
ridiculous.
golf course and all that stuff. So
Yeah.
I would say 80 to 120 will be a good average on a 400 plus.
Depending on where the house is.
Yeah,
the community.
yeah, exactly. Because we have to think
Taxes.
about taxes, HOA, insurance.
Yeah.
Yeah, I remember my first approval as a realtor when I had my first good 2 years, and they were like, "You're approved for $1 million." My wife's like, "Oh my God, we're gonna buy a house for $1 million." I'm like, "No, no, no, no."
Do not say that in front of
So my question is in regards to that. So I know we as the realtor help them and guide them in that sense. But in regards to the lenders, in regards to you guys, what do you guys do to make sure that they don't overspend? Because obviously you don't want to be house poor,
I believe educate not only not only knowing the background that we come from, or we didn't grow up having the X amount of millions.
Yeah,
or,
the excess.
The excess funds. So it's to at least to us, I think it's very important that we educate our borrowers and we let them know, hey, you qualify for this much, but based on your situation, it would be best to stay within this range.
Gotcha.
But we let them know at the end
Just
of
so
the
that
day,
they can feel comfortable.
at the end of the day, it's still gonna be based on their decision. because,
Correct.
you know,
We could just give them the advice.
We give them the instruction, we give them the guidance as if it was, a brother or sister, a family member, and that's the model that us as a company we try to bring to the customers. It's not we're not here just to do a transaction for you.
Absolutely.
We treat our clients like they were our family members.
Absolutely.
And if
That's
I see
awesome.
something that I'm gonna do for, let's say, my brother, that's the same thing I want to offer to you. So it's just
Awesome.
making sure that your clients are educated, that you know what you're talking about when you talk to your client, that that you reviewed all of the documentation that they give you. If there's, because a lot of times, like Ivan says, that debt to income ratio, you pull a credit report, but a lot of stuff, debt, a lot of times you won't see certain stuff on that credit
Yep.
report.
Yeah.
So it's just getting that, that basic information, building that relationship and that trust with your client so that they can tell you, hey, Audi, I, in addition to that, although it's not showing here, I have this, because then once we get later on down the process, if anything comes up, at least we know we have it already stipulated.
And ready to go.
In the ratio. So
Awesome.
it's like a lot of times they won't tell me stuff. Like, prime example, I have a client right now under contract, and I saw something on their bank statements. I asked him about it. He said, "Oh, it was already paid, but I had already added it to the debt to income ratio in case he wasn't able to provide the documentation that we needed."
Gotcha.
So when I structured his loan, I made sure that
That was already included, just
that
in
was
case.
already included in case he couldn't provide that.
So that's
documentation.
literally
So
crossing the bridge
It's
before
just
you burn it.
little
Got
things
it.
that you
Right.
can do. Just make sure you review everything, talk to your client, build that trust so that they can come to you and say to you, "Hey, Audi, by the way."
Awesome.
And to add to that, when we talk to our clients, we're not trying to be invasive. We're not trying to, know everything about your life. We're literally trying to make sure that doesn't happen, that you don't have any issues.
Yeah.
Because there's a lot of times that people may think that if we don't see it initially, because we're originating the loan, we're loan originators.
Correct.
But it's going to go to the processor, it's going to go to the underwriter. And there's so many, just think about it this way. They're letting you borrow 200, 300, 400,000. They're going to do their homework.
Yeah.
Correct.
The bank is
Correct.
going to know everything that there is to know. So we may not catch it, but that doesn't mean that we're not going to find out.
Mhm.
So if they don't tell us everything, sometimes we're not able to prepare them
Yeah.
or prepare the loan.
And then
properly.
now we may have a
And
dead
then-
deal
then
at
we
that
have a
point.
And then
problem.
exactly,
Yeah.
something
Absolutely.
comes up and we have to figure out a way to fix it.
Yeah.
If we can't, then
Then it dies. It dies right there.
So that's what we tell.
But
our
keep in
clients.
mind, at the end of the day, one of the things that I realized in my career, doing it for so long now, is if they don't tell us, because I tell them, I'm like, look, it'll all come to light.
Yep.
Tell I need you guys to tell me everything. It's not because I'm being intrusive. It's not because the lender's being intrusive. It's because if we know about it up front, we can figure out how to deal with it. And as long as we have that conversation with our clients, we should be good. And when you don't,
And I've
if they
heard
screw
that.
up and they don't give us the information, I'm like, hey, that was on you.
Yeah.
I told you.
And I let them know, I'm gonna be a pain on your rear end for now, but you're
gonna love me later.
It's for a
Trust me,
reason.
you're gonna appreciate it later. Let
Absolutely.
me do all the bad work up front. Let me do all the due diligence, and then trust me, once he gets to contract, you're just gonna be very minimum when you get those conditions.
Yeah, those conditions are low, and that's what I love about the conditions. Like I looked at some of the conditions for some of the files that you guys have done for us, and your conditions are very minimal, which lets me know. And this is with one of our one of your rookie lenders, and the conditions are so minimal that that it just makes it easier. Now, some of them, obviously, the conditions are higher, but once again, we go back to what we said. They didn't tell us what was wrong.
Yeah.
And the situations are gonna be different. Like there's a lot of situations that I say, that we gotta wait and see what they condition.
Yeah.
Then that we can present. But at least if we know upfront, we already have the information readily available. So when they condition that information, then we can provide it.
Absolutely.
No, and that's one of the things about this bank. They love making sure that the clients are prepped. So you can, which we were talking about the difference between a pre-approval and a pre-qualification. We do pre-approvals.
Okay.
We don't want to make you work, make you go show a house.
When you're the realtor, right?
Yeah, exactly. You as a realtor, go show a house, spend time, money, gas, time away from the family, and then the client doesn't qualify. So instead of asking the client 3 questions and tell him, oh yeah, based on what you're telling me, you qualify, here you go. We try to, get all the documents, ask the questions. It may take a little bit longer to issue the pre-approval, but it's because we want to make sure that when the deal goes in, it's going to close.
Yeah.
Really quick before we change the subject. So I kind of want to go over what's the difference between a pre-qualification and pre-approval. Just so we know.
Oh, yeah, it's cost question.
Pre-qualification means that we got verbal information from the client. So we spoke with the client. The client is telling me I make $50,000 a year. I only have X amount of debt, and I have $20,000 in the bank.
Which they usually forget on all 3. They forget the right numbers.
Exactly.
On all 3, one is fluffed, one is under fluffed, and one is
Very seldom do you get that client that's really like
detailed.
detail with their
And it's usually like a data analyst or someone that's like
usually
that has a very like analytical mind. Yeah.
And then our pre-approval, that means that yes, we got all that information, but we verified it. So we looked at the bank statements. We looked at the credit report. We looked at the taxes. Like Ori was saying, I mean, a W-2 employee, we may not need taxes. But if you're renting a house and we don't know, on the taxes, we may find the Schedule E. And on the Schedule E, it's going to tell us, hey, this client has another house. This is how much money they're making on rent. We can probably use that income that they didn't even think about.
Yeah.
So that's why we have to review everything. And once we review it, we issue the pre-approval. So.
Or they might have the Schedule C, that little extra income that they do on that they've been doing.
Yeah, like side hustles and stuff like that. Yeah.
As long as they
as long as they
may save a deal. Like say for example, you find, hey, I had an extra debt, but also, hey, I had that little extra income. Can we add that on there? And then if it's reasonable to use, or it's not gonna create more of a hassle for the client.
I have a question in regards to that. So when you look at the Schedule C and you see it, how much time do they need to be doing that for you guys to be able to count that?
So let's say, for example, they want to do the W-2 and the Schedule C. They gotta have been doing them both for 2 years.
Perfect. Okay. Awesome. Now I got a question for you guys. I'll start with Ivan, and then I'll go into you. I'll go and then ask Audi. But I want to make sure that whatever you don't hit, Audi hits on. Ready?
Perfect.
Okay. What do you tell the client not to do while they're buying the house?
Do not max out your credit cards. Do not buy a new car.
What? What are you talking about? I just bought the Lexus yesterday. No.
I was gonna bring all my friends to the mall to buy sneakers.
Funny story.
Stop it. Stop it. I just heard that. You see, that
happened to me on
indirect
Thursday.
attack.
I had a client that we were doing a pre-approval. We were supposed to meet, and literally the lady tells me, "Oh, I'm sorry, I'm gonna have to cancel. I'm going with my husband to the dealership because we've been looking for this car for a while, and they finally called us that it's available. We're gonna go pick it up." I'm like, "Wait, so you're buying you're buying a car, not a house, right?" She's like, "What do you mean?" I'm like, let's look at your numbers first before you buy that car, because it's easier to get a house and then a car." Wait, did I say that?
Yeah. Yeah, that is correct.
House first.
Yeah.
When you get the house, we're gonna make sure that the payment of that car is not gonna affect you. When you get the car, dealers just may not look into that.
Not only that,
They
it's
really
gonna
don't care
affect you.
sometimes.
Yes, exactly.
It's 100% going to affect you because it's another bill that you just added to yourself.
Exactly. That's $300-$400 less that you can use to on your purchasing power
Mhm.
a month.
Yeah.
All right. How about you? Besides the ones that he mentioned, what else could you think
Do
of?
not co-sign on anything for anyone.
Awesome. That's a
When
good
in
one.
doubt, and
Yeah.
I always tell them when anything that has to do with anyone asking for your social, call me first and we'll talk about it. Like always call me. That's like the main thing. Don't call sign for anything. Call me first. When in doubt, I'll let you know whether or not we can.
Yeah.
What about Audi? So I sold my car the other day, and I have like $20,000 in cash sitting in my house.
Oh my
Can I
gosh.
deposit that?
Well, you could actually. You could.
Okay.
As long as you can
What
document.
process? There we go.
As long as you can document, hey, here's the title. He's the purchase,
The bill of
sale
sale.
purchase.
Yeah.
Here's the exact amount that I received from the person that bought the car. Same exact amount. You go and deposit that same exact amount, and I mean it's justifiable.
What about if the money's sitting?
Oftentimes
What
even-
about if the money's sitting just under my mattress? It's just
So but before we actually go to that, I'm so happy you said this. So last week, a friend of mine called me and was like, "Hey, my friend just he's supposed to be closing on his new build, and they told him he can't close." And I was like, "Why?" And he's like, "Because I bought a car from him, and he deposited the money. It was like 20. It was 20 grand.
oh wow.
And he
Okay.
deposited the money, and the lender is saying like he doesn't have proof of where this money is
Right.
coming from."
So exactly.
And
So
I was like, "So what do you mean?" He's like, "He doesn't know where the money came from." I was like, "So where did the money come from?"
where's the bill of
And he was
sale?
like, "I pulled this
Where's-
money out like 3 months, and it's just been in my house for 3 months."
Yeah.
And then when I gave it to him, he still held on to it for like another 2 months, like in his house.
Yeah,
He
at
was
that
like-
point you could have used that. You know,
Yeah, I'm like, and he didn't have a realtor.
Oh, that's even worse.
I was like,
Of
that's
course, yeah.
that's an easy fix.
Yeah,
Like,
exactly.
I can talk to him and try to figure it out. Like
Yeah.
we can get around that.
And it's
But
a big coincidence that we're talking about that today because
Yeah.
actually all of that seasoning money and everything that came after 9/11.
oh wow,
Yes.
I didn't
9/11,
know that.
we came
Yeah.
up with the Patriot Act. So
Okay.
so Congress
It's
passed a
part of
law.
the Patriot Act.
Yeah, they passed a law. They want to make sure that that there's no money laundering when you buy a
Correct.
house.
Yeah.
They want to make sure that it's coming from a good place.
Mhm.
And if you deposit 20,000, you can. We just have to be able to source it.
Yeah.
If we can't tell where it came from, we can't use the money.
Exactly.
Even
I mean,
when
you
sell
have
a
the
house-
money.
Even
It's
when
just
you
yeah.
sell a house, let's say you have a house, you had a house, you sold it.
Mhm.
Now you move to Florida and you want to buy another house. You know, we're gonna need to see the documentation.
You
from
need to see
sale
the HUD.
transaction.
Yeah, but a lot of people, a lot of banks ask for the HUD.
We're gonna
Yes.
exactly,
Or the Alta
they're
statement
gonna ask
now.
for the
Yes,
bank
we need it.
statement, you know, showing when you did the deposit or
How it
if
got
you
wired to
deposit
you.
15. only
Yeah, we
deposited
actually,
15, like
we-
what happened to the other 10? So at that point, it's questionable.
Yeah,
So
one of
it's-
my clients is going through that with their the purchase of their home.
Mhm.
They sold the home ever, and
Oh.
and on the new purchase he has to do like a loan, and on that loan because it's a small loan because he obviously had the extra money.
Yeah.
But for that loan they asked him for the HUD because we closed months ago.
Yeah.
So they're like, well, we want to still see the HUD.
Exactly.
He's like, but the money was deposited from the title company because the title company did the wire.
Usually, yes.
But they're like, nope, we still need, and we need the wire. We need the verification of
Yeah.
wire.
Mhm.
And I was like, okay, well, we'll get you that. So I reached out to the title company and they got him the information. But
Exactly. And
It-
again, it's not us being tough. It's not
being
us
able
giving
to
a hard
source
time.
it,
It's-
it's
yeah.
just
Yeah.
we just gotta follow regulations. We gotta make sure we're in compliance, and we gotta make sure that we're really doing the greater good for everybody.
yeah, because at the
This
end of the day,
scenario-
if they can't afford it and they land on this lump sum, especially somebody that's won they won maybe like off a lottery ticket or
Yeah.
something, they really don't know how to manage that money. And if they don't get themselves situated the right way and they end up foreclosing, that doesn't only affect, a lot of people don't realize it doesn't just affect the homeowner. It affects, it's a chain effect because
Yeah.
it affects the loan officer under 6 months. It affects the bank. Obviously the bank has to pay that loan back. Like there's so many situations where it affects so many people. People can lose their jobs because of
Yeah.
something like that.
And their families too,
Yeah.
Like it's a hard transition. I mean, if you were around, in this business back in 2007,
Which I was.
exactly
The
so
ninja
you
loan.
It was
see
whole different.
the
Whole
toll
different
that-
world.
Which is why when they came up with all these regulations, it's the toll that it took on everybody.
Yeah.
It was dramatic. It was traumatic. So
Yeah, but there was a lot of people that brought that upon themselves. Like there was a lot of,
and
now I would say in the industry, I'm not talking about the buyers. The buyers to me were the victims
Right.
in most parts.
Yeah.
But there were some buyers that are not. There's some buyers that are
Mhm.
that I could blame because I know I was coming up in it, and I can recall one time I had a buyer that came to me and said, I want to go with an arm. And I said, no, we're going fixed. And he goes, no, I want to go with an arm. I said, then you're not working with me. Guess what happened 2 years later? Guess who called me 2 years later to get him out of that problem?
Mhm.
Because when that arm jumped from a 2-point interest only to a 6%,
Mhm.
then that sticker shock in
that is
monthly
huge.
price is huge.
So many
So-
people that were buying houses,
Yeah.
they could make those
The
Mickey Mouse
payments.
payments.
Mickey Mouse payments, yeah.
And then everything goes up, and they're like, how am I gonna afford this?
Mhm.
It was
It's crazy. So, but thank you so much, man. This was really interesting, and I'm glad you brought the perspective about the cash deposits, because that's huge for
Oh
some
my
people.
gosh,
They don't
yeah.
understand. They're like, but I made the money. I just took it out of
In
the
this
bank.
scenario, the lender. So by the time I reached out to him, by the time I even heard about it, he was already a week away from moving in the house, and because the lender was like, we just needed one more week.
Yeah.
They made him wait another 30 days, so it costed him
So $600
$1,700 more dollars on his
Yeah.
rent.
Yeah.
yeah.
Yeah, because they have
to
to season it.
And I was like, I wish you would have told me earlier. Like, I had a fix for you. And the crazy thing about it is, I spoke with this guy months before, and he was so adamant about buying his own house, going new build by himself. He wants to do it by himself.
Right.
So I was like, okay, do it by yourself.
Yeah.
Good luck. And then when I spoke to him
And
again,
that-
he was like, damn, I was
and that's
saving money.
important. That's important.
It's important because remember, as a buyer, you're not paying. You're not paying that agent. You're not
Correct.
paying the realtor that's
Right.
that's helping
Exactly.
you. Usually the seller pays for those
Yep.
for those fees. So to me, I think it's important to be represented. You know,
Actually, I don't even consider the seller paying the fees.
They don't.
I actually have a like a mindset for that. The seller can't pay me because the seller doesn't have the money to pay me. When a seller sells the house, he needs to get the money from the buyer to pay me, so the transaction paid me.
Mhm.
That's how I see it. So
That's a good point. Yeah.
yeah.
You know what I asked him next, right? After he didn't
yeah.
have a realtor, he went to a new building.
Yeah.
What did I ask him?
You asked them, what would you have asked him?
Did you get a fridge?
Yeah,
Heck no, you know he didn't get a fridge.
he didn't get a fridge.
Of course not.
They never get
Yeah,
a fridge.
it's funny. It's funny. We had a builder last week on the podcast, and they provide fridges, and that's like the biggest thing we talked about. Like, they provide fridges. Like they're like, no, we give you everything. We give you fridge, microwave, dishwasher.
So
your
many of them will
stove.
not get your fridge if you don't
Yeah,
ask for it.
exactly.
But they have it.
And that's what I tell them. I tell all the clients, I'm like, oh no, I'm gonna go. I want to get a new build. I'm like, yeah, but still use an agent. You're not paying them, but they're gonna negotiate for you.
Yeah.
They know what they can get out of the builder.
Yeah.
Correct.
Now I'm getting in trouble with the builders. Sorry,
Yeah.
builders.
Listen,
So-
you're not getting in trouble with the builders. The builders need to understand, and
Yeah.
we voice it a lot on this show, that we are the reason they exist, no matter what. Because at the end of the day, yes, we are brokering the deal, but it only makes sense that you need someone to be there, because there needs to be a checks and balance to everything that's done in life, and we're the checks and balance. If we're a good realtor and we're out there defending our clients, we're not just gonna let them buy the house without the fridge. Sorry, shout out to the guy that didn't get the fridge. Your fault. You didn't use a realtor. Yeah, just don't let them see this episode.
I'm sending it to him.
Yeah. But that's truly it. And the fact that you have a professional team is amazing. So let us know a little bit about, the name change, what's going on, what's new with the company. Talk to us about the exciting thing.
Sure. So, so we are still owned by Freedom Mortgage. So our CEO, he bought another bank. Well, he bought a bunch of banks on during the pandemic.
There you go.
This one, they liked the technology that they had on the retail side, on originating loans and everything. So they pretty much grabbed all of us and they sent us to
Trained you into it.
Yeah, they sent us to Rampo, and I guess it was easier.
So they like
to
the
do that.
systems.
Exactly, they like the
Awesome.
system. So we're supposed to be a little bit actually more flexible now.
Okay.
So we're gonna have more programs. Everything, of course, is still happening now. We're still going through the transition, but once
Yeah,
everything
it just
settles
happened. It happened a few weeks ago, right?
Yeah.
Correct.
about 2
Awesome.
weeks.
Awesome. Yeah, because when I saw Ivan sent me a message, and I looked at the flyer, and I'm like, "Yo, Ivan, what is he doing? Where?" And then I saw at the bottom it says, Round Point, and then underneath it said,
Yeah.
division of. So I was like,
Yeah,
"Oh, okay,
same teams and everything.
same
just different
crew,
names.
same
same
yeah,
crew,
crew.
same leaders, everything's still the
yeah,
same.
which is
For
amazing.
me,
You guys got an amazing team. So
we do.
Thank you. We
you
try.
know, so and I'm glad. Like anytime I reach out to Matt, he picks up his phone.
Yeah.
Even though I only call him for bad things, but every time I reach out to him, he picks up his phone. He gives me results, and I love that. So
Yeah.
thank you so much
Awesome. Thank
for
you.
coming
Yeah,
on.
having us.
Thank
We
you.
appreciate you, and we'll see you on the next episode. If you have questions for these guys, I'm gonna go ahead and put in the link below their phone number and information. But you can reach out to them and go ahead and Ivan give your information, like your phone number, and how do you do the same after Ivan, so that way they at least have the phone number. But I'm gonna put it all in the content in the description.
Yep. So if you want to reach out, 321-442-0084. Email is my first and last name, ivan.reyes@roundpointmortgage.com.
And my mobile number is 407-371-2800. And my email address again is ali.gonzalez@roundpointmortgage.com as well.
Awesome, guys. Thank you so much. And we have it was a great time having you guys here on a special day. So
we're gonna have to do this again. Actually, we're
Absolutely.
gonna invite you guys again. And yeah, maybe next time we won't have coffee. We'll have, I don't know.
Yeah.
we'll have something else.
We'll have something stronger.
Thank you so much for watching, guys.